whether it's a low val or an urgent repair or paying too much at auction, it is all better than standing still. It's all better than being debased, than being priced out of the market. Welcome to the Urban Property Investor. I'm your host, Sam Saggers, here to help you crack the code of real estate wealth. Today's show, man, things are debasing and we got to talk about it. Debasement is a real thing, and anyone standing still right now, you better watch out. Things that are changing, and when you get priced out of stuff, when you lose your pricing power, geez, it's hard to get out of the rat race. Think about how many people should have bought a property 10 years ago and didn't. Think about what money was worth 15 years ago and what it's worth today. Today, we're going to dig into this critical principle, the principle of debasement. I think it'll be a good episode. I think it's a good reminder to not sit on the fence. But hey, I don't sit on the fence. You don't sit on the fence because you listen to the Urban Property Investor. And no doubt you've read my book, which is not that one. I should throw that on the floor. The Australian Property Game. You've read it. And I tell you what, thank you for the reviews for the book, and thank you for the reviews on the podcast. We're back, baby. We're getting reviews. I can't believe it. It's what I talk to people about. If I meet a stranger, I say, I got a review last week. And so thank you for the reviews. All right. You know the drill. Play the program in double speed, get your life back. All the episodes I've done are actually lessons on real estate. So feel free to go back in time if debasement doesn't rock your boat. Then, feel free to do something else. We never know if the show's going to be good till we get to the end, but I think it'll be a good show because I think talking about the idea that things get eroded over time and property gets eroded, money gets eroded, opportunity gets eroded, is an important concept because standing still costs money. And really, it's a good way to frame today's conversation. Standing still actually costs you money. It costs you opportunity. It costs you more than you realize. Because debasement is really the reductions of value through all sorts of means. Degradation, loss of quality, dilution, loss of pricing power. Debasement is a property investor's effectively enemy. And just sitting still is probably the worst thing you can do as a property investor. I've never met too many property investors that have owned real estate 10, 15, 20 years. If they have taken the right approach to buying real estate, that look back and go, paid too much for the real estate. Sure, there are people that actually get it wrong as property investors. You don't need to be one of those people, and you won't be one of those people because you listen to me. And you learn because all the podcasts are lessons. I just share lessons. Now, all you got to do is take 20, 30% of what I share, go find 20, 30% of what someone else's shares and make it your own. The end of the day, the recipe for life is not standing still. It's taking action, and think in decades. Don't think in years for real estate. Think in decades, the legacy real estate can create. But I've met so many people that wish they had done something. How many people wish they bought Bitcoin, 5 years ago? How many people wished they bought gold 5 years ago? A lot of people get suckered into this kind of syndrome that they know their friend Sophie's brother bought something at such and such a price and they've missed out. That is debasement. Debasement is just the concept that you stood still, someone else didn't. And in real estate, it's the same. Real estate doesn't sit still either. And of course, the right real estate is going to move. It's capital moves faster than people. And we live in a capitalist country full of money, and it can price you out of the marketplace pretty quickly. Now, you've probably heard of inflation. Prior to COVID, inflation was like this mystery. What's inflation? We don't really feel inflation. And that's because we went through 2 decades, really, of low inflation in Australia, and then we felt inflation in COVID. And inflation is just really the idea that prices rise in relation to goods and services. But inflation, you could argue, is the symptom of debasement. Debasement is really the cause. And a classic debasement concept is the debasement of money. Money, cash, is kind of trash. It's worthless. It goes backwards. And it starts to be worth less the longer time goes on. And when you think about it, money and money printing and the fact that we're not on the gold standard anymore means that what $1 today can buy you is effectively a lot less than what you could do with that same dollar bill. It's the same dollar bill. It's the same gold coin. What you could do with that 10 years ago, 5 years ago, 3 years ago, 1 year ago, 20 years ago. The rate of debasement is very, very high in Western economies. It's around 8% a year. And of course, inflation is quite often at about sort of 2 to 3%. So you've got basically things debasing, and you end up getting this kind of inflationary effect on what is going on. And some things get way more inflationary effects than even 2 to 3%. Inflation can be 5, 10, 15%, and you feel that in real estate. You see that in real estate. Real estate, it's the same real estate that it was 5 years ago, 1 year ago, 10 years ago, 30 years ago, but the price is always different because real estate carries with it pricing power. It's a pricing power asset. It's a hedge against debasement. It's a hedge against inflation. It's a magical thing, real estate. And really why you want to own it is not only growth, not only tax deductions and rental returns, it's a defense asset against basically value eroding in the economy. Now, property price debasement is real. Properties rise and money weakens. That's what happens. And the idea of just standing still means so many people miss out on the properties that they would otherwise want. And quite often we let little moments cheat us out of opportunities. We basically psychologically tend to not lean into problems. The more problems you have, the better off you're going to be in this world. And you've got to think of real estate in decades, not months and not years, because real estate is about leaning into problems, solving problems, and thinking long term. And of course, this may mean, someone goes to buy a property and they end up having to fork out more than, what they expect. They end up, buying a property and getting a big handover bill for an uninspected repair, building and pest problem, handover issues, which they didn't factor in when they purchased. It could be $10,000, $20,000 problem. People end up going to auction and paying just that bit more for real estate than they probably should. The person who wins the auction is obviously paying more money than the other people at the auction. So they're the only ones that think the value is worth that. But I can tell you, whether it's a low val or an urgent repair or paying too much at auction, it is all better than standing still. It's all better than being debased, than being priced out of the market. And when you analyze real estate and the home price index versus currency debasement, there's a correlation. The more the currency erodes, actually, the more real estate goes up in value. It's kind of does what Bitcoin does. Bitcoin is obviously, and gold, it's actually a bit of a hedge against currency. And real estate's no different. You know, the more that they print money, the more of M2, M3 money supply coming into the market, it actually has a corresponding effect on what real estate is actually worth. So think about that. If there's more money poured into the economy through just money printing, through banks creating loans, through government borrowing money and, fueling the quantity of money, it's got a broad impact on residential real estate. The price of real estate goes up. So if we're getting debased at 8% per annum, our money is going backwards at 8% per annum, and that spits out an inflation rate. We've got to keep up with that. We've got to actually have assets that can perform better than the debasement and inflation rate. And of course, for a lot of people, their wage won't do that. Their wage doesn't perform at that rate. And it's very difficult for businesses to constantly pay more for someone who's not adding more value to the business. Just by working somewhere an extra year doesn't mean you've added more value to the business. So businesses are constrained as to what they can actually pay. And really, the only way to increase productivity is to increase skill and or innovate. And so what happens is a lot of businesses struggle to pay, higher wages. And that's why we see across the board in Australia a fairly minimal amount of wage growth. It's because the ability for the business community, particularly the small to medium-sized business community, to pay more is very, very difficult. But what happens is we all get debased. So we all need more money, and we feel this in this kind of inequality kind of metric. And it's natural to feel it, that things just cost more. And you go to the supermarket and it costs more, and your school fees for your kids cost more, and everything costs more because money gets debased. And again, the more you sit out of the market, the more you feel that, and then you start to go, well, how can I solve it? Where can I go and solve it? And quite often the resolution is not it's about owning assets, because assets are really the only thing that can solve that. You can get temporary relief in income growth, but you need assets over the long term. And you've got to think long term with this stuff, because you never know what year the debasement comes, and it can be quite irrational the way it behaves. Inflation can be a real nasty thing, And reserve banks around the world, particularly off the back of COVID, were very, very worried about inflation going into a place where it becomes super nasty. I think we got a small bite of inflation, but thankfully we've learnt. Now we all know. Now you know what inflation is like. You know what losing value is like. Now, I was debased during COVID. You were debased during COVID. Everyone. I don't know anyone who wasn't. And what I mean by that is property values doubled in Brisbane during the COVID era. They doubled in many marketplaces. And, investors were lucky enough to get into that market, maybe buy one property. But, some people could have bought two and didn't do it. They held back. They didn't go for it. And so they were debased because they could have made more money. And now to buy that same property costs a lot more. And so I could have bought more properties in Brisbane during the boom, and I didn't. And I've been debased. And I created a story in my head around I would like to do something else with my money, and I got debased. I got the lesson. And so interesting enough, this idea of investment's hard. It's hard. And if you want this life which looks after you, which is going to go full circle and pay you when you need it, you need to do hard things. And investing sometimes is hard. And buying more properties than you feel comfortable buying is hard. You've got to do hard things. You've got to tackle big problems because we are all being eroded. And the beautiful thing about real estate, you can do it for decades and it protects your erosion. Now, anyone with a portfolio over the last 10 years has been completely protected from going backwards. Could we have all gone forwards further and faster? Yes, we could, and many people did. But the beautiful thing is, for those people that bought real estate, they are now protected and they get to write their story now because they played the game. But the uninvested, well, they are now in a position where, wow, they've got to do something that before it even gets more harder for them. And money will be debased, and the cup of coffee that costs $7 today, which cost $4 5 years ago, may just cost $10 in 5 years' time. Think about that. We have gone through something, but it doesn't mean that actually comes to an end. It just is a lesson for everyone to remember. We need to not stand still. And in real estate at a macro level, at a conversational macro level, is a hedge against all of what I've just talked about. The more of it you have, the more hedge you've got. But real estate as well, when you think about what the concept of debasement is, it's basically the dilution and degradation and loss of quality of assets, of currencies, of opportunities. The degradation and the dilution of currencies and assets and opportunities. When you think about real estate debasement, there is dilution happening. Not everyone can buy real estate on the doorstep to Sydney Harbour. That horse has bolted. Not everyone can buy a character home 1.5 for $1.5 million, 7Ks to Brisbane CBD. That horse has bolted. And again, like when you think about real estate, the beautiful thing is there's always new pockets of opportunity, but equally, those new pockets of opportunity are starting to disappear as well. The dilution of property quality, the debasement of the marketplace. Better suburbs get priced out. Now, right now, there will be a suburb which is an awesome suburb that's $800,000 somewhere in Australian cities that people will and ah about buying in, and in 5 years' time, that same suburb, the average house price will be 1.1 million. And so what happens to people is they get pushed further and further and further afield, and the quality of where they can end up investing gets basically diluted. The debasement of location. I've talked about this for a long time, the debasement of location, and I saw this in the Sydney market. You know, in 2007, for $380,000, you could buy, you know, a nice townhouse, sort of 7-8 keys from the CBD of Sydney. I was working in Redfern, in the Redfern property market in 2007, you know, putting together apartments for $260,000. Now you cannot buy something in Sydney for $260,000. You cannot buy it. It doesn't exist. The dilution of that has disappeared. It has been debased. It is gone. And eventually it goes. And so when it comes to real estate, you've got to think of a couple of concepts. That real estate is about time in the market, but that doesn't mean you can start 5 years from now. That means you need to start today, because not only is money being actually losing value, and things end up costing more through the syndrome of inflation, but real estate locations start to disappear. And it means that the risk profile gets riskier. The risk profile of buying in a subpar marketplace, even though it's affordable at the time of purchase, versus something that 15 years ago was better value, better location, better neighborhood, is debasement. And again, like when I teach real estate today, I'm teaching the idea that you've got to buy some of the best lifestyle locations that you can get at the moment before they fundamentally disappear. How will I advise people to buy real estate in 2035? What would they even be looking at in 2035? The cycle, or the next cycle, is an interesting concept to me. Will we be looking at, you know, a real estate market that is completely transformed, that is without value? Today, there is value in the real estate market, but if you sit on the fence much longer, you may just miss out. And when we look at marketplaces which have not gone through debasement, in other words, have not gone through the dilution of value, certainly today the Victorian market stands out. And the reason being is during the last 5-6 years, it just didn't get price growth. So that gives you another opportunity really to play this thing, because a lot of other prime locations are now adrift. They're way too expensive for most people's budgets. Doesn't mean they're bad places. Just means for a lot of people, their budget doesn't get them into those marketplaces. And that's as much about the human than the real estate. The same dollar today buys less house, less real estate than it did 10 years ago. The only place where that's not actually a true statement, where your dollar today can buy you a similar property than what was available 5, 6, 7, 10 years ago in price, is in many parts of Victoria. So think about that. Think about the fact that you may be debased if you don't follow that marketplace. And it may mean that you have to do something pretty uncomfortable and, buying a place you don't really know that well. But all that is getting out, doing your research, getting on a plane, going to see places, starting to invest in this concept, which is a decade-long concept. And so the reality is, when we look at the continued currency loss or debasement of currency, it's got a correlating effect on where property values are. And so what are you waiting for? The cost of inaction. This is the 5 components to the cost of inaction. Well, sorry, the 4 components. Currency weakens, property prices climb, quality of where you can buy declines, and locations slip away. The delay compounds the loss. And this is what happens to people. You need a higher rate of growth the more you're debased. And this is the challenge for people. Currency weakens, property prices climb, quality of property declines, and location slips away. So all of a sudden, you've missed the opportunity. So you need a high rate of growth in a pretty bad location for a property that's of low quality because you're priced out of a property market that climbs and you're dealing in dollars that are worth less than they were the year before. That's debasement, the cost of inaction. And the delay compounds on you. It only affects you. And so you've got to choose to do something with that information. And again, you can't stop debasement, but you can outpace it. You can outpace it. Property ownership is a hedge against what I just described. You can lock in a lifestyle location. You can preserve the quality of a good property purchase. You can benefit from inflation. It's going to come. It's already factored in. Every single year, the Reserve Bank factors us in. And the true nature of all this is waiting just costs more than acting. That's the reality of it. And so I meet so many people that are fearful of doing something, but the cost of inaction is never factored into their logic. And I've met so many people who've come up to me and said, I just wish I'd listened to you. I came and heard you at an event 10 years ago, and I didn't appreciate what you were saying at the time, and I didn't act. And it's cost my life story a lot. It's meant I've had to work longer. It's meant I've had to give up things I'd want to do. It's meant I can't see my family as much as I would love to see my family because of the cost it costs to go overseas to where their parents are and so forth. The true cost is life, folks. The true cost is life. And real estate is just a hedge against all of the monkey business that goes on with price inflation and currency debasement. It's inevitable that the currency will be debased further. It's inevitable. Public debt is out of control. Governments, owe so much money. They literally will print more if they have to, and that is going to increase inflation over time. And you just don't want to be eroded. That's really the message of today. No one likes erosion. No one likes going to the beach and the sand dunes eroded. No one likes, the trees tipping over because of erosion. No one likes erosion. but people live in an eroded state, which is quite often, not really understood until, the moment you kind of comprehend it. So that's my gift today. That's what I want to share. All right, folks, thanks for tuning in. I'll catch you on the next show. Thanks for tuning in to the Urban Property Investor. If you enjoyed the episode, make sure to subscribe on your favorite podcast platform or YouTube so you never miss an episode. I'd love for you to rate the show and share it with your family and friends. Let's spread the word about property investing. Stay connected between episodes on Facebook, Instagram, and LinkedIn. And check out the rest of our podcast network at positivementor.com.au. And if you're serious about growing your property portfolio, don't miss our complimentary Property Investor Nights. Register now via the link in the show notes. See you next time.